Sanjay Shah is with us. He's CMD at Prudent Corporate Advisory Services, here to talk about the AMC space and what the outlook is on the non-MF business. Good to have you on board. Thanks so much for taking time out. Sanjay, to begin with, there are a lot more entrants that are entering the AMC space, be it Jio Financial, Bajaj Finserv, etc. What kind of growth synergies do you see for your company in light of this?
I think if you look at overall industry, mutual fund industry is getting very, very intense with the announcement of many players entering this segment. However, if you look at the positioning of Prudent, we are the pure B2B player in this segment where we do not have any conflict of interest. We might be the only large distributor who doesn't have any manufacturing, captive manufacturing. So probably I believe that our role become more and more important, because if you look at the positioning of Prudent today, we provide the business to mutual fund manufacture all the AMCs from every nook and corner of the country. We have the trust of almost 30,000 mutual fund distributors of the country. So probably it is very important for them to align their interest with us, because if they just align their interest with us, we start providing the business from almost 30,000 people. So which is about 20% of country's distributors. So I feel Prudent is very well poised for capturing this momentum on the growth side.
What happens when a BlackRock and a Jio kind of an arrangement comes out? It could be tilted more towards ETF. It could be different scale, reach, size. Your advantage is unique. You are a B2B, B2B company. But when a B2C large technology-based player is going to be going after ETFs, could that change the dynamics?
So probably, I think if you look at the message which is coming from the Jio, I think they are trying to capture the market on the manufacturing side, not on the distribution side. So for them also, I think they require to have some kind of tie-up with the distributors also, apart from their own strong reach on the ground level. However, sir, I still believe that this is not a business which is a DIY business, because initially you might start investing into the funds on your own. But however, as your size increases, some point of time you'll need the help of an advisor. And today, country doesn't have a large number of advisors. So probably as industry becomes more and more mature, the role of advisors, stroke distributors will become very, very important. So I think, as if you look at last couple of years, all the fintech has helped in expanding the market by adding all the new age investors into the platform. Now we believe that Jio will help to expand the market, and which is virtually helpful to us only, or all the countries mutual distributors will be the beneficiary for this.
I'd like to change the gears of the discussion and talk about what is happening to the inflows and outflows. While the SIP number is very impressive, but if I look at the net number, which is SIP minus the total outflow, that number is also increasing. So instead of a net flow of about 10,000, 11,000 crore, now that number we understand has come down to 7 to 8,000 crore. Is that a concern that the net inflow into mutual fund industry, especially equity, is contracting now? Even the markets are going higher, flows are coming down. ये हमेशा उल्टा होता है. When markets go higher, flows go up. But right now it's different.
So actually, Nikunj bhai, if you look at, I think that shows the mature behavior of the people. So there are two part of the flow which comes from the retail investor. I'm just talking about purely retail. So one is the SIP book, which is definitely increasing at a rapid pace, which is probably, if you look at the advantage of SIP book, because you are investing regularly, probably you are buying at all the levels, you don't require to time the market. That money is coming very, very strongly. However, lump sum money, which used to come at a better speed, has came down in this current year from April to July. If I take about Prudent's number, we used to roughly about 500 crore of gross sales. I think that number has came down to now 300 crore. So that shows some kind of mature behavior, and the definitely redemption was very, very strong in the first quarter of April, May, June. However, it came down a little bit. So I think some kind of probably the slowness in the redemption has came in the month of July and August also. But still, overall, that shows that market is not into a strong bull mode where everybody is just saying that goes on buying and buying and buying. So probably that's a very mature behavior. And we believe some kind of slowness, consolidation in the flow is always advisable, because it should not happen that people just goes on buying by looking at the historical return. So two things on the small cap and mid cap side, we wish that some kind of inflow start coming down, tapering down, and the flow from the lump sum side also should come down. However, I think the SIP is the huge catalyst for money, and which we believe that even today also, probably if you look at last 3 months, we're also seeing that the traction on the SIP side has not came down.
So what is the net number according to you? Because every AMC gives me a different number. So I thought I'll ask distributor the right number.
So I think it's very difficult to do the number crunching on the industry side, but I can tell you my number is better than the July number. So July के सामने मेरा August number अच्छा है, and if I am representative of the industry, I think August might be reasonably better, not that great. SIP, because I can tell you we are also going to touch 600 crore of book in this month. So I think SIP, which was about 550 crores. So I think the SIP is growing very, very fast. We started the year at about 20 lakhs at 530 crore. We are now at close to 600 crore. So we had almost 70 crore of SIP book and almost about 2.5 lakh SIPs. So that shows that SIP book is something which is growing very, very fast.
Okay. Do you see the trend changing in any of the large categories, balance advantage, or for that matter, small and mid cap? Because one is managing risk, second is extreme risk. You mentioned about small cap, so I just wanted to take that point for forward.
But still, I think the traction on the mid cap and small cap is visible because of the historical return. However, I think a couple of AMCs are playing this situation very, very smartly by restricting the new inflow and just allowing money to come to that segment through SIP. And we also advocate all our retail investors that if you want to participate in mid cap and small cap still, then probably look at only SIP from a next 5-7 years view. We are strongly communicating message even through your medium. Also wanted to say that if you look at SIP, mid cap and small cap, please look at now from a 5-7 years perspective. Otherwise, there might be a possibility you get a disappointment on the shorter term horizon. But I think the small and mid cap, you are right, some kind of froth is visible, and we believe that if money comes to SIP, it will be okay. On the balance advantage side, I think still inflow is there. But as the returns of this category has started tapering down, some amount of slowness is visible in that particular segment. So it's always probably the important thing is to manage the behavior and the market cycle between a couple of large segments.
Just give us a quick sense as to what the outlook is when it comes to your overall margin picture above 30% by Q2. Do you think that this is possible, and what would be your margin drivers?
Yeah, so I think probably if you look at we truly represent the entire mutual fund industry as well as entire wealth management space, and our major driver as far as our earning is concerned is coming from the growth in the AUM as well as growth in the SIP book as well as number of new partners joining Prudent as their preferred business associates. So if you look at all these three numbers, we are doing pretty well. So I think the current year we are very, very fortunate that even though the net sales was reasonably under the control, mark to market has supported very well. So if you look at from April to now, mark to market gain on the AUM side is almost about 17-18%. That has supported well. So historically, we always say that the AUM growth either comes from, so it comes from two segments. One is a SIP book and second is the mark to market gain. Some point of time, mark to market gain might support or may not support. Last year, mark to market gain was not visible. It was not there in our AUM side, but however, in the current, it has supported very well. So that number one. Number two, SIP book is growing, as I already told you, is growing at a very fast pace. And the comfort of people joining our platform is still very, very well, because we add about 300-400 partners to our kitty every month. So that number is also very, very strong. So all put together, I think we already gave a guidance that in next 2.5 years, we want to reach a magic number of 1 lakh crore of total AUM and 1,000 crore of SIP book. So I think we are very, very, very much on track. We are almost close to 68,000 crore of AUM and almost close to about 600 crore of our SIP book is concerned.
Appreciate your time. Thanks so much for joining in and sharing with us your outlook.